Hello and welcome to News Express, exclusively brought to you by Business AM, Nigeria's fastest growing financial and business newspaper. I am Chukwunonso Modi. Now let's take a look at the stories hitting the front page this week. Now the big story, Agusto effect projection, Fiscal Monetary Authority is guilty of poor Forex inflow management. Another one, Nigeria to benefit as oil seen rallying to $100. Now you should also check out finance and investment. First Bank sees parallel market in check. Also energy, power, renewable, shortly marginal fields bid round. Now in technology and innovation, defense for info governance. Also commodities and agriculture, value added agriculture. Now do not miss executive knowledge series with Fiscal and firm engagement, and also project syndicate with the price increases that matter for the poor. Now let's bring in Philip Isakba, the publisher of Business AM, to help us make sense of today's headlines. Good morning, Philip.
Yeah, good morning. It's good to be back. How are you and how was your weekend?
Fine, fantastic. How's your weekend too?
It was great.
All right. Now let's start with the first headline, the big headline. That's Agusto effect projection. Fiscal Monetary Authority is guilty of poor Forex inflow management. Now, a projection by the leading African Nigeria-based credit rating agency, that's Agusto Co, appears to expose a serious lapse in the management of the inflows and the economy by both fiscal and monetary authorities. Now, they suggest that Nigeria should not be having problems given the foreign currency inflows are coming from different sources. And in their assessment, they're saying the fiscal and monetary authorities are guilty of the poor Forex inflow management. What do you say to this?
This is an interesting story, Agusto. We expect that the full details of these projections will be coming out, I think they said Thursday or so.
Yes, Thursday,
we got a snippet of this last week, and this been apparently be circulating among some people, throughout 1 or 2 days last week, and we got hold of this. And then we're talking to analysts, about this particular aspect of it and how Agusto is saying that if you look at everything that will be happening this year, you will expect that I think they said about $90 billion,
yes,
$90 billion should be the inflows, that will come into government. If you aggregate foreign exchange inflow in 2022 will be around $90 US. Then you have a debt projected debt situation of $44 billion. So
yes.
if you do your plus and minus, you'll find that you are clearly in the positive. So we took this out. One analyst was very, very surprised. And then began to say what exactly is going on. In terms of the management of the inflows that come in, both the fiscal and monetary authorities. Are they really doing a great job managing the inflows that come in terms of how the inflows are distributed and how they are made available, for use, and then he said this is really concerning, and it went on to say that what you have is that potentially, 2022 is you have a resilient economy with consistent FX inflows, from a mix of sources, increase. The second story talks about what's called potential $100,
yes.
Analysts are saying of price of crude oil, per barrel. And then he said, so you have a lot of a good mix, of inflows, that will come in. So you talk about increase in this potential increase in crude oil prices. So a lot of inflows will come from there. So oil and gas receipts likely to be high, and then direct and then as well as portfolio investment coming in, trade credits, concessional loans, euro bonds to moderate devaluation. So what he's saying is that there's quite a lot that will be coming in. Now you have to be a good manager, to use that to manage the economy and manage a lot of things. For instance, currency devaluation. We've had that going on for a very long time now. Naira is exchanging, off the official route. You're getting at around 550, 570 to the Naira to the dollar. So it's with what is coming. You should have a good management, around it. That will moderate devaluation. With what saying that what has been projected should help to moderate devaluation. Subdue import inflation and maintain decent GDP growth. Of around 5 to 6% in 2022, and nobody has said Nigeria is going to do 5 to 6% at all. What we have are projections of around 2.5. I think the highest I've heard is about 3 or so, or 3.5%. Between 2.5 and 3.5%. Nobody has talked about 5 to 6%. But these analysts are saying that given what is expected, you should have between 5 and 6% if you manage the inflows very well. So that's the concern. So here's what I take a quote from there. It calls it. Looking at especially the monetary authorities, he call it helicopter-type monetary authorities with a penchant for spraying printed paper, Naira, not backed by Forex inflows, to create massive economic gullies and craters of distortion, rents, inequalities, rigidities, resulting in declining revenue, high cost, low margin, losses, and all manners of disincentives. So it's quite a lot that is packed in that statement. Coming from some of the analysts we spoke to. That there's quite a challenge. There's a problem. With the way the inflows are managed. But so with what is coming, the fear they are having is that will this be managed appropriately in such a way that you can use it to moderate devaluation of the currency, use it to subdue imports related inflation, and maintain a decent GDP growth of around 5 to 6%. So that is what they are saying, and this is really telling. Because you really need to watch what you are expecting, for the year, especially because a lot of things seems to revolve around our foreign exchange earnings. We've talked about foreign exchange earnings being down because crude oil has been having some challenges in the international market. Prices have been picking up. As at Wednesday, it was 85. I think about 83, $85 to a barrel. And what we have noticed, and so is that we have had a situation where oil prices have been moving up, since I think last quarter of last year, if not before that, but we haven't seen it shown. We've not seen a consistency or whatever. We've not seen that reflected, in foreign exchange reserves, for instance, or the debt situation, So there's a big challenge, and these analysts are concerned that there might actually be a problem, with how inflows are being managed, given what is expected for 2022, given the optimism and the call it what you like, but the positive vibes that are getting, will this be managed effectively, especially when you are going into an election year? We called it a lame duck presidency year, and you are going to see a lot of attention focused on something else, and then you have a rain of all sorts of manner of things happening, and that is going to be dangerous for the economy. Analysts are saying.
Yes, all right. Now, speaking on this source of funding, this foreign currency inflows. Now, they have said, and I quote, that this means that Nigeria needs only 6 months of USD inflows to liquidate her foreign currency debt. Now, I would like to ask, aside oil, what else is a source of funding? I mean, how consistent will this source of funding be? What is the investment confidence rating? Because if you're saying 6 months, we are able to get enough money to, give us some liberation. How consistent is it going to be? Is it really enough? Aside them not managing it well.
Okay, so you have what you have now is that oil prices are doing well.
Yes.
So you're going to have some money coming from oil prices doing well. The global economic situation, perhaps with Omicron being handled or being, should I say, ignored in certain people countries and are beginning to go up, to ignore it, and then allow things to happen normally. So you have the global investment climate beginning to look positive in the sense that the people can now move about, all the protocols countries have not been very strict in terms of that's restricting movement of people. So it's not like 2020 when you had a total lockdown in some places or globally. So you're not going to have that. So investors are going to be a bit happier. If oil prices are doing well, they look at Nigeria as a positive market to come to and see what's going on. So you have direct and what you call portfolio investors looking into Nigeria, and that's part of the foreign exchange that we're talking about that will come in. So if your trade. If your trade is positive and not in negative, then that's also Forex inflows. Then you have access to some concessionary loans. No longer borrowing in what you call in the commercial market. So the monies you get from that will be part of it. But it's about being strategic about what you're doing. So if you're strategic about it, concessional loans, going to the Eurobond, all of that will be part of money that will come in. Again, if your import is not that heavy, it means that you're not going to spend a lot of your forex, importing all manner of things. So that will give you some good money to keep, in your vault. So that's what they are saying will happen. So the money will come from all of those sources. Yes, and then all you need to do is to sit back and then be able to say, where are we going from here, and how do we manage this effectively to ramp up the economy and get it back running instead of crawling. Not to talk about what's it called, sitting down and not doing anything at all.
All right. Okay, now that's more clear. Now, Agusto Co says they will provide fuller details and explanations on Thursday. What more should we expect from them?
Yeah, we expect to hear from Agusto a lot more from what they have, how they came about all these numbers.
Okay.
How you expect to hear fuller details in terms of their growth projection for GDP is around, I think, between 2.4% and 3% or so. 3.2%. They are not overall. There's quite a lot of positive vibes going on out there, from all sorts of analysts and all sorts of people coming out with some outlooks or so, but nobody, we will expect to hear from Agusto more details in terms of all the different areas of the economy, the manufacturing, manufacturing, for instance, they're not too positive about what's going to happen there. The banking sector, they are not too, they talk about regulation stifling banking, the ability of banks to really do what they should be doing, especially with regards to CRR, the cash reserve ratio. That is the highest in Africa, and then perhaps the highest in the world. So they're looking at that. So whether they don't think that central bank will give any headroom. So we expect a lot more details in terms of a banking sector analysis and outlook for 2022 coming out from Agusto later on Thursday.
Okay, all right. Now let's move to the second headline. That's Nigeria to benefit as oil seen rallying to $100. Now, analysts say that after rallying 50% last year, they can only see it power further ahead this year. Now, this is great news, but what are the bases of these predictions?
Well, the global economy is, like we say, everybody's saying oil will begin to rally. It's been rallying anyway.
Yes,
50% last year, 2021. And then they don't think anything is going to put a dampener to that because they think that global economy, the restrictions you've seen, which greatly in 2020 affected crude oil prices or crude oil activities. As a matter of fact, are no longer there. Key thing is that there isn't a lot of restriction. Supply chain is beginning to ease off. A little, if not very moderately. And so that used to be. That was the main problem, 2020 going into early 2021, and they are not seeing any of this happening. Again, OPEC and OPEC Plus have done quite remarkably, in terms of being able to monitor the market and be able to put some controls in place, and their policy been very effective. So analysts are saying that we look at that and we think that this is good for oil, and then oil, it's not going to, the rallying is not going to stop, even though you have different price scenarios, that have been given, 90, some say 80, 85, But the good thing is that it's all the numbers that have been given, and even what we saw last Wednesday, it's higher than the price the benchmark of Nigeria's budget. I think Nigerian budget is around $62 per barrel.
Yes.
And all the numbers have been going up. We only hope that we're able to make some savings, because excess crude account, has gone down to the thousands, if not completely cleared out, So, but all the analysts are saying that everything looks good for oil for 2022. They think they could hit that oil could hit $100, and that would be fantastic, because the last time we had oil at 115 was around 2014 or so. 115, 2014, 2013, 2014. Fantastic for Nigeria. Fantastic. Whether you are looking at Standard Chartered Bank talking, whether you are looking at JP Morgan talking, or Morgan Stanley, all of them are positive. Or under analysts from Orlando are saying this looks good. What OPEC and OPEC Plus have done, the supply chain situation, the global economic demand from different places, with regards to oil, it's looking good, and that 2022 might just be a good year, and Nigeria should be preparing. The only thing is election year. Will they be preparing well? Will they be putting the right things in place for this windfall?
Exactly.
Will the excess crude? Will they think about the excess crude as a place to put all the excess money that they will make from it? So that's very important.
Yes.
But it's looking good. We're hoping that they will hit $100 per barrel, and some very optimistic, that crude oil, JP Morgan people are saying 125, even 125 this year, and 150 in 2023. It's fantastic. Of course, it's good to be optimistic, about these things, but. Once the global economy bounces back and things are moving very positively, then it has a great impact on oil prices, and that's what they are seeing ahead for 2022. And we hope that Nigeria, being dependent greatly on income earnings from crude oil, does benefit in the end from this.
Okay. Now, I want us to look at the fact that this Omicron variant, as much as investors are trying not to, show too much concern or letting the economy to just go on its own, it is affecting the economy. Now we have to look at the fact that high oil prices, which also drive up gasoline and diesel prices, could keep inflation uncomfortably high well into 2022 amid global supply chains and eventually slow the economy recovery from the pandemic in many other countries.
Exactly. I mean, you see, you can be very positive in terms of crude oil prices, but you know that Nigeria imports fuel. As a matter of fact, a Dangote refinery will not be happening until fourth quarter of this year.
Yes.
Hopefully it does. And that means we're going to still have our supply situation, supply difficulties. Because the oil refineries are not working. They are not in place to produce the quantity, or even producing at all, for the domestic economy. So the inflation can be, that's what they talk about, import-driven inflation, So we hope that things will work out just well. And that's why we're talking about the management of the windfall or whatever, the benefits that you're going to get, whether it's benefit from foreign Forex inflows or whether it's benefit from oil prices being particularly high, So you need to manage that with regards to inflation, what that does to inflation. That it's important that we take note of that.
Okay, all right, that's fine. Now, thank you, Mr. Philip. We'll see how the stories develop this week.
Thank you very much.
All right, that was Philip Isakwa, the publisher of Business AM, Nigeria's fastest growing financial and business newspaper. That's all for now. Stay tuned for more.